March 31st, 2018. It's a Saturday, which means this is your weekly mixtape and your weekend review of news and topics that are impacting your financial plan and investments. It's the end of the first quarter, which means quarterly reports will be coming out in the next few weeks, and this will be the first time you will see a negative and or some red on your statement, depending on how you're invested, for 9 quarters. So we've broken the string of monthly gains on the U.S. stock market, and now our quarterly gains have been ended as well in the U.S. stock market, at least. But silver lining in all of this, if I were to ask you in the middle of the quarter in February how you thought the markets were going to end up, where you thought they would end, if you guessed down 2% on the Dow, down a little over 1% on the S&P, I would say that you were probably lying. I think there was a lot more fear in the markets this quarter, wild swings, but at the end of the day, making it through all that turbulence and only being down 2% on the Dow, 1% on the S&P 500, numbers that are within reason, nothing to create a panic. I think we made it through that storm, at least the first quarter, okay. So again, if I were to ask you middle of the quarter, I don't think you would have guessed with just down 2%, down 1%. I think the numbers would have been larger. So all the more reason to stick to your investment plan, not react, talk to your financial advisor, have a diversified portfolio, and stick to the plan. But nonetheless, quarterly reports are going to come out, and you might see a negative for the first time. Probably not anything you need to be alarmed about or panic about, but talk to your advisor to see if there's any changes you need to make to your portfolio and your plan. So that's the market talk. Economic news, the really big thing is inflation is continuing to creep up towards that 2% target. I need to take a look at my notes because the index that's being used is a long one. The Personal Consumption Expenditures Price Index showed another gain, the largest gain in over a year. Just again, moving closer to that 2% target that the Federal Reserve is looking at for inflation. We've talked about in the past on whiteboards about how the Federal Reserve will raise rates or lower rates to try to keep inflation where they want it. So if inflation is getting closer to that 2% target, then we will probably continue to see the Federal Reserve raising interest rates as they plan and what the market is anticipating. So timing was perfect. I did not do this on purpose, but yesterday the boys and I did a whiteboard video for the whiteboard series about Consumer Price Index, a different metric than the personal consumption one I just mentioned, but another way to measure inflation to see where it's at. So inflation is rising within the limits that the Federal Reserve is looking at. So the trick is going to be, can they get it to 2% and keep it there without it running up? We will see, but expect to continue to see the Federal Reserve raising rates because inflation is going where they want it to go. On business news, just a little news blip that came out. Walmart is in talks to purchase a large insurer by the name of Humana. This is not the first time we've seen a deal between a retailer and an insurance company. We've seen Walgreens and Anthem strike a deal before. But I just bring this up because it shows how the markets and business will evolve to keep up with what's going on and what is needed. So whether this is to keep up with the changes in healthcare or to keep up with Amazon, it's not the first time we've seen this. It's far from over, so who knows if it actually goes through, but it just shows how big retailers are trying to evolve with business to meet consumer needs and grow and stay in shape and also keep up with the big elephant in the room of Amazon. So we'll see what happens with that. Nothing major as far as going to your planning, but I just thought that was something worthwhile bringing up. Something we haven't talked about in a while, cryptocurrency, so we'll kind of give a quarterly update on that, only because it was something that I'm very interested in, spent a lot of time researching last year and kind of educating about, but this first quarter of cryptocurrency in 2018 was not a good one. It was a bloodbath, a lot of red on those as well. Just to reiterate my concern and my warnings to be aware of what you're getting into if you're going to invest in this space, make sure you understand it. Don't chase returns. Don't get caught up in FOMO, fear of missing out. If you don't understand it, it's case it out. The reason I bring this all back up, Bitcoin in the first quarter was down 49%. There are a lot of people who bought Bitcoin when it was at 18,000, 19,000, and now it sits around 7,000. So that's a tough introduction to investing in a space that's new and hard to understand. It's also a very common thing with average investors of getting in at the peak and then watching it go down, selling. Is this the bottom? Who knows? Not encouraging to go out and buy now, but it's something I talked about a lot. Kind of dropped off a little bit because all the excitement went away as the prices came down. But it just goes again to show why investing, you need to stick to things that you understand or stick to things that your risk tolerance is careful or your risk tolerance is comfortable with. So be careful with what you're doing, but cryptocurrency is probably not going to be going anywhere. It'll probably happen again. This is not the first time it's had big drawdowns. So hopefully the next time we have a big run up, we learn from our lessons. We don't dive back in and all of a sudden get into it because we get excited. We understand what the risks are and maybe stay away from it if it doesn't make sense for your plan. So that is all for the weekly update. I had a busy week on All About Your Benjamins, whether it be the blog or the podcast. Last weekend on Saturday, I released my interview with Nathan Faber, a great one about dollar cost averaging. And then on Tuesday, I had my interview with Desarte Yarnway about his book and talking about the power of your mindset when it comes to building your wealth. So if you missed those, be sure to check those out. I recorded another great conversation with my friend Brad Sherman about the fiduciary standard, fee-only financial planning, and more. That'll be out on the podcast, on iTunes, and on the blog on Tuesday. So be sure to subscribe and leave reviews if you would like. I don't like asking for those, but that's the best way to get the podcast moving up the ranks and to get it in front of more people so they can hear people like Brad and Desarte and Nathan talk about things that I think are important when it comes to financial planning that maybe a lot of people aren't hearing about. So be sure to subscribe to the podcast, subscribe to the blog to keep up to date with everything all about your Benjamins. If you have any questions, topics you'd like to see covered, guests you'd like to try to get, have me try to get on the podcast, you can email me at contact@allaboutyourbenjamins.com. And you by now know where to follow me on social media. But if you're new, at Justin Castelli, JUS10CASTELLI on Twitter, RLS Wealth Management on Instagram and Facebook. I try to do it all, put content out there for everybody. And with that, I will let you get to your holiday weekend. So happy holiday weekend. Enjoy the time with family and friends. And we'll see you at the next episode.